Hello everyone, my name is Upkar Joshi and today we are going to start this new series on banking and finance. The topic that we are going to start today is insurance and today is the first lecture on insurance. I am sure all of us all at some point in time must have heard insurance is the subject matter of solicitation. बीमा आग्रह की विषय वस्तु है, ये हम सबने सुना होगा. But before getting into the explanation of this statement, I think we should first try and understand what is insurance. So let me try and define insurance for you. Insurance is an instrument using which you can transfer a probable financial loss arising out of an unexpected future event to someone else today. I know it is a little difficult to understand that way, so therefore let us break this statement into pieces and try and understand this. इसको तोड़ लेते हैं टुकड़ों में और फिर समझने की कोशिश करते हैं. So insurance is an instrument using which आसान है, I am sure we can understand this plain English. You can transfer. Insurance is an instrument using which you can transfer. An instrument is a tool or means, हिंदी में माध्यम कह देते हैं, using which you can transfer a probable financial loss. अब probable क्या होता है, probability क्या होती है? Probability is the likelihood of occurrence of an event. किसी घटना के घटित होने की संभावना हिंदी में कहा जाता है. एक और मिलता जुलता शब्द है possibility. So let me try and explain the difference between possibility and probability. So if I were to say possibility is the universe and probability is a subset of that universe. Probable means there is a good chance. Possibility means we might not. एक छोटी सी मूवी क्लिप है, it's an interesting movie called The Pursuit of Happiness and I would like you all to watch this short clip.
Where are we going now?
To see someone about my job.
I don't understand.
You don't understand what?
Are we going to the game?
I said possibly we're going to the game. You know what possibly means?
Like probably?
No, probably means there's a good chance that we're going. Possibly means we might not. What does probably mean?
It means we have a good chance.
And what does possibly mean?
I know what it means.
What does it mean?
It means that we're not going to the game.
How did you get so smart?
I hope you liked the video. So, and also you understood the difference between probability and possibility. And now let's go back to our definition of insurance. Arising out of an unexpected future event. Now, as we all know, future events are always unexpected. हम लोग expect नहीं कर रहे होते हैं कि future में क्या हो रहा है. थोड़ा सा इस पर time spend करते हैं. Let me try and explain this to you. Now, obviously when one sits down in his or her car and starts driving, one doesn't expect an accident. Do we? We don't, right? So, ये एक तरीके का unexpected future event हो गया. Right now you're sitting in the car. If the accident has to happen, it will happen in future. And as of now, nobody expects that he or she is going to meet with an accident. So therefore, we are saying unexpected future event, right? So let's go back to our definition. An instrument using which you can transfer a probable financial loss arising out of an unexpected future event to someone else today. Now, what we are saying is that this there is a possibility of a loss happening in future, and we are not expecting that loss to happen as of today, but it might happen. Now, if that were to happen, who is going to absorb that loss? In the current situation, it is you who is supposed to absorb the loss. But if you buy this instrument called insurance, then you can transfer this future liability on someone else. Sounds interesting, isn't it? बहुत अच्छा लगता है सुनने में कि अपना लॉस किसी और को आप ट्रांसफर कर सकते हैं. But the big question is, who is this someone else and why would that person absorb your loss? So let us try and understand this now. See, we all understand that a business is a game of numbers, right? किसी भी बिजनेस में बहुत सारे रिस्क इन्वॉल्व होते हैं जिनको हम बिजनेस रिस्क कह देते हैं. Any unforeseen event that has the potential of bringing risk or loss to your business can be considered as business risk. And as it is very difficult to make profit in any business. You have to do a lot of number crunching, isn't it? Now just imagine if someone is willing to calculate the probability of occurrence of this event, which is seen as business risk, and is also willing to absorb that risk for you. How would you feel? Would you feel relieved? Would it give you peace of mind? Would you save a lot of time? और वो जो आपने टाइम सेव किया है उसको आप अपने बिजनेस को मोर प्रोडक्टिव, मोर प्रॉफिटेबल बनाने में यूज कर सकते हैं. Would it take away all your fears? And all this time that you would have spent otherwise worrying and money in making provisions for these unforeseen events can now be put to better use, isn't it? You can utilize this time for planning, execution of better policies. You can utilize this money for buying more raw material, inventory, etc., marketing. So if you still haven't been able to guess it, let me tell you that all is done by your insurance company, meaning it gives you peace of mind by covering your risks. Now, to provide you this peace of mind and safety, they charge you a small fee which is called premium. Let us now delve deeper and try and understand some of the important definitions in insurance. Definition 1. The one who takes over someone else's risk on his shoulders is called the insurer or the insurance company. Definition number 2. The one whose risk is being taken over by the insurance company is called the assured or the insured, meaning us, you and I. Definition number 3. In order to get rid of all our anxieties and fears, in simple terms, we can say that we are buying insurance. So insurance is nothing else but peace of mind. And in order to provide this peace of mind to us, the insurance company charges a small amount. Now this small amount is called insurance premium. Definition number 4. So what would be the quantum of that risk? Under what circumstances would the things be covered or not covered? Or the things would be covered under certain conditions or situations? And the big question is, how much premium would we have to pay in order to transfer this risk? Definition number 5. So all these points that we just discussed are written in a proper document, and a contract is done between the insurer and the insured. Now this document containing all the important information like risks, the coverages, the exceptions, the exemptions, the payment process, the claim process, the conditions, situations, etc. is called the policy document. So let us try and now sum up. So far we have understood what is an event, what is insurance, insured or assured, insurer, insurance company, premium and policy document. Let's start with the next topic, categorization of insurance. So broadly speaking, there are two kinds of categories: general insurance and life insurance. But these days, health insurance has been attracting a lot of numbers, and because of the volume of business that the health insurance does, it has been categorized into a separate category now. Therefore, we can say that we have three broad categories: life insurance, health insurance and general insurance. So let us try and understand these categories one by one, and let me try and give you an example for better understanding of these categories. So let's say there is a small family of 4 people, husband, wife and 2 kids. Kids are of ages 8 years and 12 years. Now, wife is a housewife and takes very good care of the house and the kids. Husband, on the other hand, is placed in a large multinational organization and earns really well. Kids study in a good public school close to the house. Now let us try and look at the expenses of this family. Generally, the expenses of a small family like this can be divided into 3-4 broad categories. So these major heads of expenses could be household expenses, shopping, travel, school fee, etc. Now I would like to stop here for a second and ask you, have you noticed something in this example so far? No? Let me try and bring certain points to your notice. In this example, the 4-5 heads of expenses that we have just mentioned, that the family does, for these expenses, the family is completely dependent on a single source of earning, which means the salary that the husband brings to the house. Now, since we are talking about insurance and risks connected with it, I would like you all to look at this example from risk perspective. So, assuming something happens to the salary earner in the family, in this case the husband, what happens to the family? Well, no one can make good the personal loss to the family due to the death of the husband, but the financial loss due to this death to the family could be covered. In our example, if the husband had taken an insurance policy and named his wife the nominee, then in case of this unforeseen event, which means the death, the wife would have received some compensation from the insurance company, and this is called life insurance. There are various kinds of life insurances that we are going to discuss a little later, but for the time being, let us concentrate on our example of this family. Now, assuming that this family that we are talking about has a house, a car, and the wife has certain jewelry, which means valuables. Now, when you have these valuables, there is always a concern for their security, and even a thought of losing these valuables gives you stress. Therefore, the general insurance companies come up with various plans to cover these valuables against any unforeseen events, and what is covered is actually the economic value of these valuables. Mind you, I am saying economic value of these valuables. Like life insurance companies, the general insurance companies also offer various kinds of products which we are going to discuss in the times to come. So that brings us to the third category, the health insurance. Now obviously all of us would like to stay healthy always, and therefore we get up early, we go to the parks, we go to gyms, we do exercise, etc. But there are times when our body requires repairs, maintenance, hospitalization, operation, etc. We have also noticed that the cost for hospitalization, treatment, etc. has been going up in the past few years. And keeping the rising costs of healthcare in mind, the insurance companies have come up with various kind of products. Now, these products offer to cover not just hospitalization but also things like daily expenses, consumables, etc., etc. Of course, these are subject to terms and conditions. So let us try and sum up what we have learned so far. We have understood what is an event, what is insurance, insured, assured, insurer, insurance premium, policy document. We have also learned the three broad categories: general insurance, health insurance and life insurance.